are going live with Mark in 5, 4, 3, 2.
Good afternoon, everybody. Good morning to my friends in California. I hope everybody's doing great. Welcome to a special live State of the Market show. We are going live because there are developing events in Iran that the market clearly likes. And I want to put some things into perspective. I want to sit down with you guys and potentially talk about how we want to trade this. I'm going to have Andrew on here in just a minute or two, and he'll provide, I think, some real perspective to how you react to a market like this. Then around 2:15, 2:20, I'll bring in Vaz, and we're going to look at the charts and talk about how to trade these charts as well. Then we'll take any questions you might have. So with that, let's talk about let's dig in and talk about this. All right, and to jump in, let's bring in our own director of education, head of option trading, a man whose trading career spans 5 decades. He is the one, the only Andrew T. Giovinazzi. Andrew, thank you for being here.
How are you doing? We took over.
No, I threw you a curve. I know. Welcome, Capital Gains. Thank you for giving us your half hour. Don't worry. We're going to be delivering all kinds of other ideas, all kinds of funness here. But this feels big, the move that we've gotten today. It seems like we're going to, the process has changed. And it wasn't until I saw the Iranian guy tweeting that I was like, what in the world is going on? Because we were already having kind of a nice day, Andrew, up 90.
Right. Well, I think the big...
And then
it was... Yeah, we're having a good day. Oil was going through the strait again, or apparently, whatever the reports are, who knows? Because you can't believe anything. It's very hard.
No,
what do you believe? And the U.S. last night blew up a big Iran missile depot. It's possible we took out a big chunk of their offensive capability, and they're like, uncle, who knows? But so now you have somebody in Iran saying we want a deal. And
yeah.
And again, what you hear in the press and what's actually happening have been two different things. Like I wrote yesterday about this whole thing where in past wars, whatever conflicts, things have gotten to a point and then the U.S. got involved somehow, some way, historically, in the 20th century into the beginning of the 21st century. That's kind of, that's sort of how it has gone down for the most part. And then this was different because all of a sudden we're trying to preempt or push an action, kind of push this Strait of Hormuz thing, right? Push this oil gap. Everybody, whatever people think, they were trying to make Iran play this card, right? So the uncertainty came after we went in. Instead of solving something, we were trying to press an issue, and it was a high risk gambit. It's still a high risk gambit. It's not over. Like we talked about, like, oh, I'm kind of surprised they did this. Okay, you can agree, disagree, whatever, but they were trying to move something forward, and now we're at this place. Iran, you would think reading mainstream media that somehow they're winning this conflict. They're not. They're not winning anything. They can still launch missiles or whatever, but that whole capability has been degraded severely. Anyway. So somebody in Iran saying, "Hey, you know what? If we can get some guarantees, we would sue for peace." And that's where we find ourselves right now. And what I wrote in, yesterday in my F market and all the stuff I put out to my students was mostly, as soon as the Strait of Hormuz opens, this conflict will be, for all intents and purposes, over. That's your moment. If boats are going through there and oil is flowing, it's essentially over. The U.S. is going to stick around with Israel and kind of police, mop up, whatever, but the heavy lifting will be done. That's, again, my opinion. So, and that's where we find out, no matter what comes out of the White House, whatever the press says, it doesn't matter. The only thing that matters is that, oil flows, boat flows, whatever those economic, all of the heavy stuff that goes through, that's got to go through. And that was where the crux of this was. So, and now we sit here and all of a sudden we were up like 1.3% today, something like that. And boom, we're up almost 2.5% now.
Yeah. And that's what I'm saying. This is not nothing, right? We were up about 1.3, 1.4%. And now we're up 2.5. The NASDAQ was up maybe 1.5. Now it's up 3. And the Dow was up about 1%. It's now up 2.2. But the only thing that is red, as it should be in this market, is your safety areas. XLE is off 2.3%. Consumer staples are off 1/3%. And utilities are down. Everything else is flying. Biotechs are up 7%. Housing 3%. Materials up 1.4%. Communications 2.7%, financials 2%, industrials 2.75%, technology 3.5%, healthcare 1.5%, consumer discretionary now up 3%, retail up 2.25%. This is a rip. Now, Andrew, you've seen, and this is why it was so important that I have you on here, right? You've been around the block, right? We both have, but your block, the block you've been around is a little bigger than the block I've been in. It's a little bigger block.
It's older. It's an older block. It's the mature block. It's the gentrified block, we'll call it.
So you've seen these moments where things look really bad and the market's been under kind of really consistent pressure. And then we have a piece of news that changes the narrative. And that appears to be what we are looking at today. Not only are we up, we've now completely filled the gap from Friday and are breaking through into the selling that we saw on Thursday.
Right.
And even with where we are, from the pre-war peak on the 25th, we'll say, we're still down 450 points. Call it 5%.
Yep.
6%. So how and the part that would cause someone to pause is that we don't know if we're going to come in tomorrow and be up 2, 3, 4%, or if this turns out to be fake and we're breaking the lows from Monday.
Yeah. And then we're down 2% again, erase all this. So, and that's a problem. You don't know. And like I told my Trader X students, my other students, Ripzone and my classes, I bought some SPY, I bought some Q, I bought some stocks, I bought some Oracle. I just bought a bunch of stocks on my list today. And it was basically right around the time, right before we gapped. I had bought some even after the gap. So if you're managing your retirement account, I said last week, you need to be selling some of your oil stocks here. So I started moving money back into a little bit of tech, broad market stuff, and just selectively adding to stocks that I like. And I'll do that next week and the week after and the week after until we're back to, who knows where we are on the year at that point. But one thing I will notice is VIX went from 30 to 26. So just to your point,
Yeah.
Mark, right? You were saying, who knows where we go, right? You're like, oh, are we up 2.5 again? Or are we down 2.5 again? And that's why, you were talking about, the value of strangles and where the options are priced. And, things happen pretty darn fast in Trump land. You remember on April 4th, we had the down, and then all of a sudden we renegotiated the tariffs, and essentially everybody got charged 15%.
Right.
Now, literally 4 different messages would come out on Twitter from Trump while all of this stuff was going on, but while the plan was kind of going forward. Like, this is what I was writing about to people. The plan, whatever battle plan he had, he laid out on February 28th, and literally is going down the list. So there wasn't anything random there. The tweets and everything and negotiating, whatever he's saying, he had like 8 different directions going on. But in the meantime, he just continued, the military continued on, Israel continued on, and they keep just banging away, and they're not stopping. So, and today apparently ships are going through the Strait of Hormuz, which is why the market was up 1% this morning. So could you wake up tomorrow and SPY is trading 6,700? SPX? Sure. Yes. It just depends on who, and then there will be back and forth. But I think you got to, if you haven't bought any stocks this year, it's not a bad place to buy some stuff. I would probably stay away from most oil names because there's going to be kind of the knee-jerk sell-off. But, I think you want to, probably you can buy a little silver or gold because maybe you'll see I expect to see some pops there. That's something we did in Rip Zone today. Trying to lead buying some call spreads. I still haven't filled them, and then everything took off. So, these are emerging markets. Not a bad place either. Because if oil prices go back, the emerging markets should kind of EEM, that should fly. So, yes, those are trades you can still do. But again, it is very news driven. It is out like crazy.
I like what you're saying. I think this is our opportunity to maybe pepper into a little IWM, a little bit of small cap or mid cap MDY. You've got some of these Mag 7 names, Mag 10 names that have been absolutely crushed. Meta has just been flushed down the toilet for what appears like 6 months straight. The chart of Meta, think about it. On January 29th, Meta was trading $750. It hit a low of $520 on the 27th. Over $200, over $230 lower, about a third of its value, and it's just starting to get a little rally here. Maybe found a floor. So there are no one's saying, "Hey, go in with both hands." Right? It's time to just buy everything and eat as much as you can. But this is given what's just flipped, and now you should have an understanding at home. Hey, if we get a deal and it becomes official, there's another 3-4% in the S&P to rally, maybe more.
Yes, I agree with that.
And there's some opportunity here. I'm going to pull in Vaz here in a second, but I wanted to talk you mentioned strangles. And I really like those ideas. I really like the idea of a strangle because folks that watching at Twitter, YouTube, or in some other services here, if you're not familiar with the strangle, what a strangle is buying a out of the money call so that the market explodes higher, you make money, and then also buying a slightly out of the money put so if the market tanks, you end up making money. Now, nobody cheat here. Given, and I know you know the answer, Andrew, given that we're now up $160, how much do you guys think for Thursday night? So the rest of today, all day Wednesday, all day Thursday. All right. The last 4 days, we have closed down over 100, down over 100. We opened up over 80 on Monday, hit a low of down 50, and now we're currently up $160. We have not had a day in the last, 2 weeks? Last 4 days. We'll just say the last 4 days where we have not moved in the S&P 500 at least $100. And the average has been closer over the last week, closer to like 120, 130. So, folks at home, no cheating. How much do you think it costs me to buy a just out of the money call and just out of money put, knowing how much we have been moving? Yeah, you would think, Andrew, you would think it'd be at least the average of a daily move, right?
Yep.
Right. The SPY has been moving on average over the last 10 days, $10.17 every day. It could be up $10, it could be down $10, it could be up 5, then down 5. You would think it'd be worth at least as much as 1 day of movement, wouldn't you, Andrew?
Yep.
All right. Well, SPY is trading 647.70. I can buy a 647 put and a 649 call. So just out of the money on the put, just out of the money on the call, and they're going to charge me a whopping $8.40.
That's for Thursday?
That's for Thursday. Did your ears perk up a little bit on that, Andrew?
A little bit. I believe that's what's known as right now, it's hard to believe it, but I believe that's called a bargain.
It is a bargain. It absolutely is a bargain. And it's an opportunity that we put some of my people in. Folks at Trade to Close, this is something that is going to be heading your way, so be ready. And speaking of Trade to Close, one Andrew, I wanted to bring on Vaz as well. Hi, because
I'm going to want to know if Vazi's still bearish, because she was pretty, like, at the conference. She's like, everybody, this looks kind of ugly. I'm not liking it.
She was dead on.
She was dead on.
Dead on. Dead on.
Mark, did you buy the 49.47 for? Let's see. I would cheat. I would almost go. Okay, I'm just going to cheat a little here.
I use the SPX options to trade this instead of SPY, but it's essentially the same trade.
I'm gonna.
Yeah, I would be buying. So one of the things that Vaz, as you guys know, or if you're watching, you might not know, she is the pharaoh of the Fibonacci. She is a volume profile expert, and along with Alicia, the best charting person that I know. And she is a particular expert on one product, and that product, she's great at everything, but she has her eye on SPY in a way that nobody on this planet Earth does. And I wanted to get her thoughts. Andrew's buying that strangle right now, folks.
I bought the 49.45 for $7.68.
That's cheap too.
No.
And you can cheat that way. Like if you think we're more likely to go up, then you still buy that close to the money call and you buy a slightly more out of the money put, knowing that if you're wrong and we don't go up, we're going to really get face punched. So I want to bring on Vaz to kind of walk us through where are we on our charts, what is she seeing, and what are my kind of price targets as I'm trading this. Hey, Vaz.
Hi.
Good afternoon. Thank you
Hey,
for
guys.
doing this. I know it was last minute.
Miss Ozzy.
Hey, what's
Folks,
up,
this-
Ajo?
To put in perspective how great this group is, I'm on with Alicia. We watched the market explode. I call Andrew. I'm like, Andrew, I think we should go live at 2 o'clock for everybody and help him through this because something's changed the market. He's like, yeah. And then I go, and I think we need, and then I go and ping Vaz. I'm like, Vaz, SPY's exploding. It's going crazy. Can you jump on at 3:15 and help us out? And she was like, heck yeah. Anything to help our trade to close wiretap game plan and fuse traders. So this was all put together in about 25 minutes. And Amin, of course, being the hero that he is, was like, sure, I can broadcast you. So we're very thankful for that. But Vaz, I don't know if you heard me talking, like something definitely has clicked with the market. I mean, that you don't make an extra 1% jump if there's no there, right? Now we could roll right back over. But I was hoping you could kind of take a look at your charts and give people an idea of like, okay, if this is real, what are our targets? And then how do I know if when we roll, if we, let's say, pull back, when do I know like, oh, this isn't real and we're rolling right back over?
Yeah, sure. I'll share my screen. This has been the easiest trade ever, and it's just so blatantly obvious. I have been tracking this pattern and doing a lot of research around it. And I mean, basically, we are just in a very, very strong downward channel. And anytime it hits one of these perimeters, you buy it, short it, buy it, short it. I mean, it's really easy. I have been, because we are in bearish conditions, and bearish conditions do bring the Jameson jump, which are just like fierce bear rallies. These rallies are usually on news that, because I have a cat, we don't like to call it dead cat bounce. We call it the Jameson jump. So basically, when you have these, basically when you're in bearish conditions, you have these extreme rallies because algos, traders, they're very sensitive to any sort of last ditch effort to have the market go higher. Notice that when there isn't Iran news, the market goes up. When there is an update on Iran news, the market goes up. But it has helped temporarily, and then they immediately sell it. This particular time, as Mark said, this rally does have legs. However, I mean, just look here. It's happened before. It happened this month. It happened in early March. On March 9th, we rallied viciously to the upper bounds of this channel, and then you short it. And then this is kind of no man's land. Then you reach the upper Hey, stop that. Jameson jump is acting up. You hit the upper parameter, then you short it. Then you hit no man's land. Then you hit the lower parameter. You buy it, then you short it. I should have bought down here. I feel like a dummy for not doing that because it was so obvious. But the way that things were going with this gap down, what the next step is, it's capitulation. And capitulation has not happened yet. That has been guarded. We're still in like the disbelief phase to panic. Capitulation usually happens. I'm predicting that it will happen, and it's not easy to time. Of course, listen, they could scoop this up, but what the market needs right now is not just positive Iran news. It needs a sweep of like a data sweep of good economic news, which we do have ADP. We do have non-farm payrolls. If that is very bullish, that can help refresh us to the highs. Other than that, usually when capitulation happens, it happens near a weekend and it happens at the upward boundary of the channel. So you'll usually hit this, and then on shocking negative news, you start to break this channel lower. I would say that is 80% chance going to happen. The other 20% is we have amazing ADP, amazing non-farm payrolls, Fed, like everything it's surprising, but good surprise for the economy. That will help. Remember, Iran is just the catalyst. That will help the bullish Iran catalyst continue to have legs. I'm going to pause, and then I have more to say if you guys have any follow-up questions.
Yeah, and that's, you're actually making an even better point as to why a strangle setup makes so much sense. I don't know if you heard me talking about this when you were waiting, but we've been moving the average daily movement of SPY over the last 10 days is over $10. And I can buy the right out of the money put and right out of the money call for $8.50. Vaz, if let's say that 20% works out and we do hit that 20%, how hard of a rally would that lead to us? And then on the downside, let's say Iran says, you know what, we were kidding. We're going to double war with you guys. Not just war. We're going for double war. And
they do kind of say that though, don't they?
Yeah. They will. What's kind of our upside that we're gunning for?
I'll show you exactly.
We do get those, and then we get the downside. What's the downside?
It's almost this is like actually freakishly obvious. So with my analysis, we broke the 200 and retested the 200 and stayed in this channel. Let's go back to the last time this happened. Consolidation channel break. We broke the 200, retested the 200. So here's this. Now, this is where my analysis was getting a little wonky. Is this test from the previous time, which did break the downward channel, and we made a bear flag and then absolutely ate it? I couldn't tell if that happened here because we broke the 200, retested, got rejected. I couldn't tell if this was a mini bear flag within the channel, or we're going to get that bear flag breakout and then the slam. This happened perfectly right around the 200 period moving average. I guess it can still happen. We make a bear flag. We rally back to the 200, so that'd be like 662, and then we slam lower. That's what's a little hard to predict this time around. Everything else has been super easy. So if that happens, that means, Mark, we're going to rally from 647 to 662. If that's going to be your bear flag. And then right around the weekend, we'll get, and I'm not saying this weekend, we'd have to break out a couple days. Maybe next weekend, we start to fade that, and then you get your capitulation. So I'm trying to assess where we are in that period. The bear flag could have happened already, or we're about to get it. Regardless, we have not hit capitulation. If this is a bear flag and we do rally, we're going to hit 662. If that's not the case, you short right at this perimeter, because this is like the edge. Like we can maybe have a mini gap up tomorrow to like 650, and then they slam it, which happened March 17th. So like those are the patterns to follow. You have two camps. There's really no gray here. Like there's not any guesswork. Like those are the two things that are going to happen in between the next 2 days to 2 weeks, which is why with the path to least resistance lower, I've needed time, but I feel like a dummy because I just could have easily short-term bought the end of this channel. That's what I've been saying this entire time. For some reason, this one, I was like, we're nearing a weekend. Are we going to capitulate? It's hard to say, but I noticed that we usually capitulate at the upper end of the channel. So that could happen either tomorrow, or we bear flag to the 200 and then we capitulate. That's it.
Yeah,
those are the two things that are going to happen.
You just laid out a perfect plan. We talked about it on the show this morning, folks. we're live on State of the Market. Vaz will be joining me tomorrow every day at 10 a.m. We don't normally hear live at 2:30 in the afternoon. But what we talked about was exactly just that things are so fluid and there's so much movement. Yes, Vaz.
Okay, one more thing, because I'm also seeing people commenting about MACD curling higher. Okay, notice this. Here's MACD. Here's the upper perimeter. Let's go back. Let's see the last time MACD started to curl higher. It looks like it was right here, which was when we broke that channel. We broke the channel, retested, and then MACD swerved to the downside. So that's another thing that I'm stalking, which is why I'm leaning towards these two camps. Like this could be a nice breakout where again we cross MACD, have that short-term rally, and then we get crushed. So follow that as well. And by the way, I'm referencing last March of 2025 if you guys want to follow along on your own.
That was an interesting mess in of its own. That was the tariff tantrums. So Vaz, that's again why this kind of play works so well with what you're showing us, right? Yeah. If I'm paying $8.50 for the SPY 649 call and 647 put, and we go to your 662 level, guess what? My call's worth $13. Huge win. And that could happen tomorrow, right? If we do get more semblance of a deal, Andrew, you've seen these before. How big of a move can you get, like knee-jerk reaction? I'm thinking to when Congress passed, the biggest one of these I can remember was when Congress announced TARP and we exploded higher. TARP being the asset, the bank bailout. They announced TARP. We absolutely exploded higher. Then TARP failed, and we hit peak VIX. Everything fell apart. Congress actually finally freaked out, and then the next day they passed TARP again, and futures were limit up prior to the market opening.
Yeah. So I think SPY is, if there's a deal, we're 665 easy. SPY 20 handles.
Yeah, that would get us to, we'll get that test of the 200-day moving average that Vaz was just talking about. And then people will go, wait, there's this private credit mess. There's, all the destruction and infrastructure. And you could, in short order, roll right back over. I do think there's still, as Vaz has kind of pounded the table on, this isn't just about Iran. Iran's a great excuse.
Right.
Well,
don't forget the Iran
thing.
Things. Those credit things, everything is exacerbated by uncertainty over oil. Dollars get tighter, everything gets tighter when volatility explodes and the flow of oil, and those are big considerations that all of a sudden, you're the insto credit kind of freezes, and that's, I think, one of a bigger part of the market. You could have leverage, but when you lose access to any more credit at all, makes it even worse. So the timing of the credit issue and oil spiking to the moon was rough timing. It's like a perfect storm,
Yes. Now people are likely asking, Mark, how do I trade this? Well, if I pay $8 in a market like this where we're moving $100 a day, $10 a day in SPY, if I buy the Strangle for $8.50, I'm looking to sell one side of it, my call or put, at a minimum of 80% of the value of the whole thing, preferably more than 100%, more than the entire value. So if I pay $8.50, I'm looking to sell either the call or the put at like $9.50, $10, because that will get me paid. And then let's say we do get some sort of positive news, right? Where we hit Vaz's 662 level. I sell the call at $11. Remember, I paid $8.50 for the put and the call. If I sell the call at $11, what am I left with? I'm left with a put that I own, and I have $2.50 in my pocket. That's not a bad way to be. You like getting paid to have a hedge on, Vaz?
Sure.
Sure she does. So you now have seen Vaz's chart plan, right? Andrew and I have kind of talked to you about the historical nature of what we're doing and how it's traded in the past. And we've even given you a battle plan for the next couple of days. I'm going to just see if we've got any other questions here, any specific questions for us. And, most people are saying, it looks like we still may get a capitulatory event. We still may get a question. They want to know what expiration. I am buying the April 2nd. If you want to give yourself a little bit more time, it'll cost you a little bit more, but you could buy next Mondays. But with this trade in particular, I am buying the April 2nd. I'm doing the SPY 647 put, and I'm buying the 649 call. In total, I want to pay the 647 put now is $3.90. The 649 call is about $4.60. I want to pay less than $8.50 for it. And again, my target is to sell one side of it at a minimum of 80% of that value. So $7, something like that. Or preferably I'd like to sell for more than the whole value. For excess, if you wanted to trade SPX, and folks thinking XSP, just subtract a day from those, a number from those strikes. I would be looking at, I'd be looking at, let's see, I'd be looking at the 6520 call. That's going to be about $42. And again, I'd be looking at the 649, the 6490 put, and that's going to be about $38. So I'm going to be looking to pay about $80 for the 6490, 6520, and an XSP that'd be the 649, 652. All right, folks. We just wanted to kind of give you a plan of attack for this market. We want to show you the historical context of how these things have traded in the past. And I wanted Vaz to come on and really show you what she was seeing in the charts.
Thanks.
If you are interested in getting more of Andrew, Vaz, and myself, again, we're live every morning at 10 a.m. Eastern time. And if you want to join Vaz and I in about 20 minutes, you can check out Trade to Close. Just go to tradeToclose.com and get yourself a 7-day free trial. And just a reminder, this is a market where those long-term ideas make a lot of sense. Sybil, the AI engine for the Series Club, is going to be, I think, if we're coming out of this, it's going to fire several ideas in a couple of days.
That's my next write-up right here.
and we're going to, the founders pricing ends today. So if you haven't gotten on board with that, give us a call, 888-872-3301. If you're watching me on Twitter, give this a like and a retweet. And if you're watching me on YouTube, please like and subscribe. If you got questions, leave a comment or a stock request.
We're on Twitter?
Oh yeah, we're on X.
What up, Twitter?
Yeah.
Nice.
All right, everybody.
Bye-bye.
All right.
Hi, Twitter. Bye, Twitter.
Bye. For the Pharaoh of Fibonacci, the vicar of the volume profile, the one and the only Olivia Vaz, and our director of education, head of option trading, and one heck of a VIX trader, Andrew T. Giovinazzi. I am Mark Sebastian. I am your only option. I'll see all of you at 10 a.m. Eastern time on Wednesday, along with Vaz. Have a great rest of your trading day, folks.